What's up, San Antonio? My name is Caleb Janasek. I'm an audit manager here at ADKF, and I'm absolutely honored today to introduce you to Brittany Millican. She is a senior in the tax controversy department here at ADKF. She has been with us since 2021. She specializes in sales tax. She is a graduate of Sam Houston State University. She's an enrolled agent, and I'm not kidding, she has been to Disney World 7 times. So, Brittany, thank you for your time today. I think the most important question to ask is, you've really been to Disney World 7 times?
Yes, I have.
When did this start?
It started when I was 5. So my family would take vacations to Disney World like every other year. And so 7 kind of racks up fast when you start from 5. And now I'm,
That's
31. That adds up really easily.
Okay, I'll have to have a talk with my mom later.
Yeah.
That's not the only reason I brought you here today, though. I also wanted to kind of just get some general information. Why does the IRS send notices?
Yeah, so the IRS sends notices for lots of reasons. One of the reasons is there's a balance due on the account. Like if the return was filed and all the tax hasn't been paid yet, they'll send a notice for that. Another reason is they're changing information on the return. Like if you forgot to input some information, like include a 1099 or something like that on your return, then the IRS will be able to send you a notice saying, hey, you forgot this, we're making the change. Another reason is to assess penalties for late filing or whatnot. So that's just one of the many reasons that they send notices out.
Gotcha. Okay. So you mentioned the assessing penalties. Everyone loves that. What are some types of penalties?
So there's actually over 150 different types of penalties.
So many.
Yeah, that the IRS assesses. Some of the most common ones are late filing. So you didn't file your return on time or you didn't file an extension. And so the return's late. Another very common one that we see is not making estimated tax payments. If there was also information left off of the return, they charge a penalty for that as well.
Okay. How expensive do these penalties get?
They can get pretty expensive. Penalties that are related to like forms, like missing forms or something, like 1099 maybe was, there was information incorrect or is missing. Those can be $150 per form. We've seen where that can rack up pretty quickly if you have information missing on 100 of those. Can be a pretty lofty fine. And then another one is payroll related penalties. The IRS takes that very seriously, and so those penalties are very high. So, and they can also go into where they'll place liens and levies on your accounts and stuff like that.
Wow.
Yeah.
So are the penalties always monetary?
So they're not always monetary. There's also, there can be criminal charges as well, so which can include jail time. So it's not just, them looking at your money and stuff. They can also, like I said, they can do liens and levies, and they can, take money from your bank accounts or, take assets and stuff, property and stuff like that as well.
Wow, okay. So Brittany, you mentioned earlier that the IRS could place a levy on your account. Kind of tell me a little bit about what is a levy?
Sure. So a levy is where the IRS can first they place a lien on your account, and that's public record. And it lets, creditors and stuff know, like, hey, this person owes the IRS money. And once the IRS has put that lien on your account, that can lead to a levy. And whenever there's a levy, they can seize your bank accounts, they can seize assets, they can garnish your wages, and stuff like that. The best way to avoid having a lien and levy on your account is to stay current on all your current tax returns and whatnot.
Okay. You don't want the IRS to come knocking.
No.
Which is one of my questions. Do the agents actually come to your house or your business sometimes?
So for businesses, if it's related to payroll, then yes.
Okay.
If it's related to payroll, because that money is not the businesses. That's something that they're taking out of their employees' paychecks, and that is going to the IRS. So if a business is not reporting that to the IRS, they take that very seriously, and so they will come to a place of business. A revenue officer will come to a business, and but as far as individuals, the IRS is never going to come to an individual's home.
Okay.
Even if you get phone calls, the IRS isn't going to call you either. They'll send a notice, which we kind of talked about earlier. They'll send those notices first, and those notices kind of build up in intensity if you don't respond to them.
So what are the different types of notices?
So there are two different types. There's CP notices, and those are just computer-generated notices. Those, the system just pops those out.
Okay.
And then there's LTR notices, which those are letter notices. And those, when you get those are more like an agent has been doing something on your account and they're sending a notice related to that. When you get those notices, there's always, extra time to respond to them and stuff because they come in sequence. First one usually is like saying, hey, you got a balance due, you need to pay this, and then 30 days later, they're going to send another one saying, hey, you still have a balance due, you owe us this money, you need to pay, and then so that kind of continues on. And then they'll send the, kind of like the last one is they send it by certified mail where you have to sign for it. And it says like, you still haven't paid this. We're going to start levying your, your assets and your bank accounts and whatnot.
Okay. So Brittany, let's say I get a letter in the mail, IRS tell me I owe penalties. I'm not having a good day. What do I do from there? Do I need to pay it immediately? Can I get out of this? Do I need to call my local tax CPA? What are the steps I need to take?
Yeah, so if you get a notice of penalties and interest, you can. There are some ways to get out of them. You could call your CPA or whoever filed your return and let them know that you did receive that notice, and they can look at it and see if it's even right. Sometimes the IRS is wrong. Shocking. What? Yeah, sometimes they're wrong. And, from there are ways to get out of penalties. There's some statutory ways, and there's also, there's reasonable cause. Was there a reason, if you filed your return late, what was the reason that you filed your return late? Okay. Was there death in the family? Was there, did you have a serious illness? Was it some other type reason? Like, was it the Texas ice storm we had a couple of years ago, and, something like that. We can always look at those reasonable cause, like, was there something extenuating circumstance that caused, this return to be late or caused, us to not be able to pay our taxes on time, and we can send a letter to the IRS and say like, hey, like, can you please take care of these, take these off and stuff. And there's also another one where it's called first time abatement. And the IRS will look at your prior 3 years. If you're compliant, you've filed all your tax returns, you don't have any prior, account balances or anything like that, they'll give what's called a first time abatement, and they'll just say, yeah, we'll just take those penalties off. You've been a good taxpayer. Okay. So those are just a couple of ways that you can do that.
No, I think that's good. I think a lot of people don't know they have those options.
Yeah.
Awesome. Brittany, thank you so much for your time. I think this had a lot of valuable information for just the community in general. So thank you, and safe travels back to Houston.
Thanks. Happy to be here.
Yeah.